It's Thursday, the 27th of July, 2023. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories, 5 minutes. Let's get going. Story number 1, the Reserve Bank is under pressure to not lift interest rates next week after June quarter inflation came in below expectations, reflecting the slowing economy.
The Consumer Price Index rose 0.8% in the June quarter, the smallest rise since the September quarter 2021. And for the 12 months to the end of June, inflation was 6%, down from 7% 3 months earlier. That's all according to the Bureau of Statistics. Now, both those figures were below expectations. Inflation peaked at close to 8% late last year, and price rises are definitely slowing. But we still have a very strong employment market that will put pressure on wages and prices. The underlying measures, the ones that take out the volatile items, the ones that the Reserve Bank likes, they're falling as well. In fact, the trimmed mean measure was 0.9%. You analyse that, multiply it by 4, Michael, you have an inflation rate of 3.6%. Not too far off target. Federal Treasurer Jim Chalmers welcomed the data, but he did say there's a long way to go.
So what's going to happen next week, Sean, to rates when the Reserve Bank board meets? Are we going to see a 13th rate rise in 15 months?
Very difficult question to answer. The Reserve Bank says it's looking at data since its last meeting. We've had stronger than expected labour force figures and weaker than expected inflation. The latter is probably more important. On balance, financial markets agree and think there won't be a rate rise on Tuesday. Market economists aren't quite so sure. The real divergence of views. As AMP's Shane Oliver put it, yesterday's data should be enough to see the Reserve Bank remain on hold next week, but it's a very close call.
All right, on to story number 2 now. And the Australian housing market looks to have fully recovered momentum with the highest price rises across the capital cities last quarter since late 2021, and unit prices increased for the first time in over a year.
They have. Not so good for people renting, good for people who own them. During the last quarter, combined capital city house prices recouped almost half the value lost in the 2022 downturn. Now, across the board, so this is the median, houses fell by about $60,000 last year. They're up again by about $34,000. Sydney's leading the charge. Canberra's a laggard with prices not moving in the nation's capital, according to the Domain June 2023 house price report. In the unit market, prices rose over the quarter in Sydney, Melbourne, Brisbane and Adelaide. Darwin was steady, falls in Canberra, Perth and Hobart. All about the mismatch of supply and demand. That's the main reason. While there's rising demand, particularly from immigration, the total number of homes for sale is still more than 20% below the 5-year average.
Sean, story number 3, mining giant Rio Tinto last night announced a 34% fall in profit on the back of lower commodity prices, with the net profit of $5.1 billion below expectations.
The disappointing result included an $800 million impairment against its alumina refineries, which in part is due to the federal government's new carbon policy. Rio said it will pay out $1.77 a share interim dividend. Now, that's below the past 2 years, but they were great years. So this dividend is still the third largest half-year dividend ever paid by Rio. Iron ore again dominated the result, with the division lifting volumes by 8%, even as prices fell. Copper did well, even though prices were down about 12% during the year. Aluminium did okay too, although the price of that metal dropped 25%. The announcement was made after the ASX closed yesterday. During the day, Rio's share price ended up 1.5%.
How about this one, Sean? Story number 4, a major United Nations report has recommended smartphones be banned from schools to help stop classroom disruption.
UNESCO, the educational, scientific and cultural wing of the United Nations, says the ban will improve learning and help protect children from online bullying. Excessive mobile phone use is associated with poor educational performance, and screen time worsens children's emotional stability. That's according to the Guardian newspaper, which is reporting the agency's research. Digital technology as a whole, including artificial intelligence, should never take precedence over human-centered vision of education or replace face-to-face interaction. The report adds, it says, and I quote, "Not all change constitutes progress. Just because something can be done doesn't mean it should be done."
Story number 5, Sean, pretty much has it all. Here we go. Joe Lewis, the billionaire real estate investor and owner of Tottenham Hotspur Football Club, has been charged by US prosecutors over multiple alleged instances of insider trading.
The 86-year-old, who's one of Britain's richest men, is accused of tipping off employees, associates, friends and romantic interests with non-public information about various entities and lending some of them hundreds of thousands of dollars to trade on the privileged knowledge. According to an indictment that was unsealed on Tuesday, Lewis and his associates were collectively able to make millions of dollars using the stolen information, which included favourable results from clinical trials. Lewis is alleged to have shared information about publicly traded companies, including Australian Agricultural Company, AACO, which is listed on the ASX. The claim is that a director of AACO leaked board conversations about the impact of the Queensland floods to Lewis. Lewis, whose personal company owns about 50% of AACO, then allegedly passed on the information to one of his pilots and said they should trade as soon as possible. A big no-no.
Yeah, it's going to be a fascinating story to watch, that one. There we go, the top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 27th of July, 2023. Remember to hit follow on the podcast, and if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed Business News wherever you listen to podcasts, and that comes with a bunch of interviews as well. Today's interview was a great one for investors. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.